Avan, it's a buying opportunity. I mean, Berkshire has not exited because he's in a profit. It's because of the mistiming of the event before the pre-IPO placement and so on. We think Paytm is a unique case of the fintech and the digital app going extremely positive. Positive news on their NBFC front is also where they are doing Kirana lending. I think this is a must-have in a portfolio, and use this large exit to be a buying opportunity. So we are very, very bullish on the entire exchange space. Hence, MCX is something which is in our portfolio. We have advocated IEX at lower levels, but BSE has been a star. It's up, I think it's almost tripled in the last 2 years. And I still think there is room on the upside. As a disclosure, we are one of the brokers there. So we have a vested interest that exchanges do well, and in turn the brokers. But the opportunity, the sheer weight that Tata's and Government of India have left something on the table for the retail investor. And, very, very pedigree names. So that is what you are aware, REC, PFC have been in the best space in the last 2 years than in the last 10. Now, they are assessed to sovereign debt. They have a bond rating which is the highest ever, and return on capital because of transition of, power surplus and receivables became extremely attractive. So 11% dividend yield is something which made them stand out. The same would be the case for IRDA, but like you have to weigh the negatives also, change in government policy, change in government stance. But I think it is universal that green energy, clean energy is something we are going to keep striving. By the way, ESG compliance stocks and funds have a huge inflow from Middle East and other places where there are benchmarked funds for such, corporates and bonds and so on and so forth. And I think that is a very, very fast going space, which will always have an added advantage of lower yields and cost of money. So I would definitely give it a very, very thumbs up on this Navratna status. You will get a very sharp bounce on opening, and I think it is an accumulate for a slightly longer period in your portfolio.
There are enough legs to take this market up. Now, obviously, the flows are such that there is rotation going on between sectors. And the idea is that slowly but surely you have inched your way back to 20,000, which was seemingly impossible 1 month back. Now, all this means, take the broader picture. Yields, by the way, Aisha are at 4.28. There is a strong case there that the Fed will start to cut from the first quarter of 2024. So all that, holier than thou, you and XYZ is all over. Crude is headed lower. We think the dollar weakness should add more color to the metals. And let's not take away that the OMCs have actually had the most stellar run in the last 2 weeks than in the last maybe 1 year. And like I said, you add a Reliance today for outperformance. We close above 2,400. We open gates for another 200 points. So, you have to be in the market. Only then you will find solace or places where you will make money. So, like you said, I still think the Adani short covering rally is not over yet. There will be still more color over there. And like you pointed out, the OMCs, the metals are going to lead this charge. You can see outperformance from some other gas plays like GAIL, which is looking very strong, and where earnings have actually been the best in the PSU pack. I still would suggest for investors that ACC and Ambuja, these are two stocks which we still think have a lot of merit in them. Cement prices are heading higher. ACC, Ambuja were under the cloud for whatever reasons of ownership. They have been demarked aside. There is no prior debt on their acquisition which has been cleared. And I think ACC and Ambuja are two stocks which you can put your money on. Coming to the Siemens, the numbers were very, very strong. And that is clearly evident that the capex cycle and the electrical market is doing extremely well. Now, the overhang is that what the demerger talk is of the parent from the energy business and so on, which will mean that there will be people who will take this as an opportunity to book profit. We also are of the view that Siemens may have run its course, in the sense there are other opportunities where there is not this parent company diabolical sword which is hanging over the head. So I still go with L&T, Cummins and Thermax. Those are three stocks which we think are going to be outperformers. Well, hold 100%. Book profit it depends on your the duration, Avan, because they are talking of 30% CAGR. And we know that space in renewables and green energy, cost of money is the lowest. So I think they will do very well as a company. It's now got a, Navratna status and so on. and they are the flavor of the day, month, and the year. That is PSUs, particularly PSU power lenders. So I'm very optimistic. We picked it up yesterday for some clients who could not get that much in the initial allotment, and we are not in a hurry to sell. We will play out this over the next 2 years. Like I said, the initial pop and the returns have been startling. That is what you'll expect today again in Tata Tech. But I would still say use any dips on decline to buy this IREDA. Tata Motor also on the back of the Tata Tech listing, Ashok Leyland, Maruti, all of them are doing extremely well. So I think this season is such, when you have 32 lakh weddings and 4.5 lakh crore expenditure, then cars, autos, two-wheelers, depending on one's budget, will definitely find its way into each household. I still think there is more upside. It's first time that I've seen the pessimism which rubbed out on Eicher was actually a buying opportunity when they, when Hero launched Harley Davidson and Bajaj Triumph. But Eicher has made a very strong comeback, and there's no running away from the fact that Royal Enfield as a brand is really matured and is there to stay. So I would definitely put my money on Eicher. I think the upside is now about 20% from here, and you can add a Hero which we own as a disclosure. So both these stocks are in our portfolio, but we would advocate buys. Ashok Leyland is my dark horse play in the CV sector. It has rallied from 165, 170 when I was recommending to 180. I think that stock is headed to 225. The Tatas have led from the front. They've always created value. You have TCS, you have Tata Elxsi, and you have Tata Com, all very big win. My top pick over there, if you have not got this, buy Tata Tele, TTML. That is going to be the consumer-facing arm of this of the entire Tata Group as far as ICT goes, and they are making huge inroads. So that is the one which I'm actually betting on. As a disclosure, that is in our portfolio in that range of 85-90. We think Tata Tele can double from here in the next 2 years. So I am in the camp that Bank Nifty goes to a new high, and it will be led by large caps. HDFC, by the way, in the last 2 weeks, it's actually HDFC and Reliance, which I was stressing, will be the ones which will take you past 20,000. So the sheer weight of those two stocks is what is going to move the index. And like you rightly pointed out, the index also has lagged because of these two's underperformance. So I am in the camp that banks make a strong comeback. And, the likes of ICICI, Axis, which I've been saying for the last week, 10 days, looks extremely good on the charts. And HDFC will join the party along with Kotak. If you have been a trader, this is a good time to book profit and go on an early vacation. But if you are still there, then some of the banks are looking extremely good. Federal Bank would be my top pick over there. This 146, 147 consolidation may play out. Mid-caps, in the mid-cap earnings, because of their presence and increase in the gold loan basket, their NIMs are at the highest ever. So I'm very bullish on Federal Bank. I think 160, 165 is very much on the card. Second would be PNB. I think PNB arguably came out with the best results along with CanBank in the PSU space. And at 77, 78, again, it gives you an offering of going to new highs closer to 85. My third pick is a slightly name which I've been tracking for some time and I have a vested interest. Let me make a disclosure. Is SW Solar. There was talk and, unambiguity because of a cost overrun or a delay in bank guarantee which got encashed overseas, and the old promoter, that is the Sapurji Palonji, had to make good the indemnity. They were up till 30th November, and today there is clarification that they have cleared all that. They have cleared the indemnity and there is no pending of the bank dues. The company has a debt of 1,000 crore for which they are raising capital, but look at the order flow. They have just recently announced a deal which is in the making for $2.5 billion on solar panel servicing with Nigeria. There has not been a single order yet from the parent group, that is Reliance Energy, which is looking at 35 gigawatts. So if you have the patience that in the next 2 years, this stock is a doubler. Ultratech has been my biggest holding. I've been telling you to buy ACC, Ambuja, both on the back that there was hardly anything on the Adani case. And both those companies combined owned about 58 million tons of capacity. So I would still go with ACC Ambuja. You can add Shree Cement over there, given that pricing power is very strong for them and their cost is the lowest not in India, in the world. But I would stick my neck out that Ultratech is headed to 10,000 and beyond. So stay with market leader as a vested interest. Both ACC, Ambuja and Ultratech are in our portfolios. And we are very, very bullish on that entire space. Maruti in the four-wheeler. No question that how they are expanding their new portfolio, and the weighting is amazing. And I think their margins may be arguably in this quarter at the highest. So Maruti headed for 12,000. And last but not least, I have been an advocate and hold Bosch from 12, 13,000. 25,000 was a joke last year, but that's very much on the card. So stay with the market leader. You can add an Apollo tire. I think that would be a very, very good proxy, given that rubber prices have again softened and there is hardly any Chinese import. So Apollo tire can give you another 10% from there. However, as a caveat, these are all stocks hitting new highs. So do a little bit of diligence, but buy some now and wait for corrections to add more, or do a sip. Tata Tech listing was a superb listing, but I think now with Tata Elxsi and a lot of the other names trading cheaper and at less market cap, which have a very, very strong proven record, I would not chase this stock. Let it go to people who are delving into that. I would still stay with some of the large cap players which are giving me much more reasonable comfort on owning. HCL Tech has been my top pick over there. I still think HCL Tech is headed to 1500, and I would add a Persistent and a Coforge on declines. There is a lot of valuation comfort in a lot of businesses across the board, PSUs, power, railways, which are giving opportunity. Only you have to wake up and smell the coffee. The broader market is where I would be very, very comfortable with a Kotak or an SBI and HCL Tech to put my money.
If you like this video, then like, share and subscribe to ET Now.